Welcome to Momentum Investing, property investing made easy. One of the world's top podcasts on property investing, bringing you the top experts in the field so you can learn firsthand what it takes to create passive income and take control over your financial future.
Hi, Momentum Investor, and welcome to Momentum Investing Podcast. Wow, do we have a show for you here today. We have an interview with Richard Shepherd, a well-known property investor in the UK. He has a very large portfolio. He teaches all over the UK. He's been an advisor to the Office of Fair Trade. He's been on SkyTV, and he is one of the experts on lease options. He is one of the absolute best investors in the UK when it comes to the creative strategy of lease option. He's going to share more with you in the episode about what that is. In the episode, he's going to share with you how to structure a lease option, the 4 ways that you can use different creative strategies to increase the value of your property. And I would guess you only know one of them today because that's what most people talk about, but he's going to show you 4. In addition, he's going to show you his predictions for the overall economy and how he believes that we are in the throes of a financial collapse of our current financial system and what that will mean for us going forward. So we have a very exciting show for you here today. So make sure to stay to the very end. He's going to give you some great advice, some great tips, and some things you can really bring with you home. And I want to thank everyone who sent in questions for this episode and have had advised us on future speakers to bring on. If you have anyone you would like to see us interview, please go to our Instagram profile at Momentum Property Education, comment on one of the posts, let us know what you want to know more about, who you would like us to interview, and we'll do our best to get them on the show for you. So with no further ado, let's dive right into it because this is exciting. All right, so welcome to the Momentum Investing Podcast. I'm here with Richard Shepherd. Richard, welcome. Thank you so much for being here.
Thank you, Daniel. It's very nice to be here with you as well.
Yeah, so we're very happy to have you on this call, especially in these times. I can imagine it's going nuts over there. So tell me a little bit, what are you guys doing now, considering the overall situation?
Well, it is a little bit crazy, I have to say. About obviously 3 weeks ago, the United Kingdom went into what I would call a semi-lockdown. So it's not
important to make the point, of course, that's 3 weeks from when this was recorded, not when it was be posted. That's his kivy here.
That's right. Thank you for that distinction. So yeah, it's 3 weeks ago. We're talking sort of early sort of March. We went into a semi-lockdown, which meant that basically some of the UK is under house arrest, I guess. There's no other way to put it. Some people can go out if you work for the National Health Service, if you work in a key sort of scheme. But the children are not allowed to go to school. I've got a 2-year-old who's not allowed to go to nursery. 2 other kids were not allowed to go to school.
I know the feel. I got 3 kids here at home, so trying to record a podcast like this is easy.
Exactly.
Get the kids out.
Yeah. So we've got that, and then you're allowed out of the house only to do shopping, essential shopping, and only if you're allowed to go to work or to the office if you like, but only if you can't do that work at home. So we're sort of working around those restrictions, and it's interesting to say the least.
Yeah. So obviously, as a property investor, this has a lot of knock-on effects. I mean, viewings have been stopped, both for tenants and for buyers. But obviously, there are still people who can't pay their bills, who are being repossessed, who are looking to, I mean, I know your specialty is creative deals and lease options. So these are times for opportunity. Obviously, I don't want to minimize what's going on and the humanitarian. I mean, one of my mentors actually passed away now with this whole
really
in the coronavirus. Yeah. So
sorry to hear that. Who was that?
Oh, it was you don't know. It's a man called Gert who passed away sadly. But to put our investors' hats on, this obviously is a time of incredible opportunity at the same time.
Well, that's right. I mean, to be honest, my speciality is something called lease options. Now, it's called lease options. It's a massive, great big canvas that entails, really.
Yeah. Yeah,
But
maybe you want to give a short little description of lease options.
right.
Just for
So
all our listeners.
my speciality is called lease options, and that is how you control a property, but without having to buy it. So the ownership of the properties is not necessary. The definition of a lease option is you have the right, but not the obligation, to buy a property over a fixed period of time, which means, in plain English, for those who are not familiar with it, you can buy it if you want to, but you don't have to if you don't want to. Okay? So with that, and we're putting contracts in place in order to tie these up sort of legally. Whereas if you're going to buy a house, you're going to need, as an investor, 25% deposit, 40% deposit, whatever it is. With a lease option, that can be anything you like, to be honest. So there's no stipulations about who can invest with lease options. You can invest from overseas. You can invest whether you're based in the UK. But one of the key distinctions is that they work best on a day-by-day point of view if you are direct to seller.
Yeah.
So rather than having to go through the estate agent, which is what a lot of investors, even in the UK, do, they're trying to do everything through the estate agent because they don't know of any other way. Mm. The estate agents, obviously, his offices are no longer open because they're not deemed as essential.
Yeah,
so the estate agents aren't doing the viewings.
Yeah.
The surveyors will not go out to do the viewings to ratify a property for a mortgage lender. Some mortgage lenders are just doing desktop valuations, but quite few. But the other thing that changed, Daniel, even before the lockdown, was that the Bank of England base rate changed.
Yeah.
And so the Bank of England base rate, I mean, you'll know this. I've been teaching people for 6 years now and telling people that interest rates are going to go down, not up. So even though Mark Carney, the previous governor of the Bank of England, has been saying that interest rates are going to rise, in the same time frame, I've been saying interest rates are going to fall, they're going to fall, they're going to fall.
Right.
And I was wrong once, which is when they went up from 0.25 to 0.75%. Mm. But again, from 3 weeks ago, from when this interview was done,
exactly,
it went down from 0.75% to 0.25%. And then it went down again just a week later from 0.25% to an unprecedented 0.1%. Right. We've never seen the Bank of England base rate this low in its history. And so, but what also happened on the same day, the Bank of England dropped their rates, and then the banks, the private banks, raised their rates. And that's what we've been seeing over the last few weeks. Hang on. So the private banks have access to free money, pretty much.
Yeah, exactly.
But they're raising the rates that they lend those out for new mortgages. Now, that is, you have to excuse me, I've just got to, that is huge, because what it means is that the banks themselves are what we call shoring up their coffers.
Yeah.
They're not expecting anything to be amazing anytime soon. And for that reason, that's why they've raised their rates. And that's a key moment, because at that moment, I wanted to see how everything else responded. And how I saw it respond is that, okay, the stock market crashed. stock market came down. Gold and silver markets came down, although there's good reason to believe that the gold market will bounce back.
Yeah.
The foreign currency, at least the pound, dropped. Cryptocurrencies dropped, even though you could still make money on that, but it's a volatile market.
Yeah, of course.
And so we took the view that there was every reason to believe that investing in property in the UK was still going to be a good place, as long as you're looking to invest in property for the medium to long term, rather than if you're just looking to make a quick buck. Because if you're looking to make a quick buck, you're really basing your investment strategy on the market.
Yeah, exactly. I mean, right now, obviously, you can buy out, a discount, and I do the quotation marks because really, if you buy it at what the market is willing to pay, So, if you can't do viewings, if you can't go to the open market, then, you'll be selling to someone in the same type of buyer as yourself, which means they're also looking to get a discount.
Right. So we're telling our investors, and I agree with that. We're telling our investors that, look, if you're looking to make money in property, what you can't rely on the market. If the market's obviously going to drop, because if people can't do viewings, people can't sell their properties. If moreover, if mortgage lenders are not lending, if they're lending out at higher rates, that means less people are going to be able to buy the properties.
Yeah.
By definition, that means that the housing market's going to fall.
Yeah.
Now, I don't know exactly how much they're going to fall. Nobody does. Nobody has a crystal ball in this country, but I would suggest it's going to be significant, and it's going to be at least what it was back in 2008. Yeah. So that being the case,
very interesting to see. I mean, we're seeing large institutions, and I think they're trying to temper kind of the worry. I saw Savills came out with an evaluation where they expect it to drop by about 5 to 10%. But I agree, it could easily fall a lot more.
Yeah, and I think it's going to be higher than 5-10%. I mean, I think that's being extremely conservative.
Yeah.
But
it's in their interest to be conservative. I mean, they are an estate agency. They want us to believe in the market. They want us to go buying. So obviously they're never going to give you the biggest doom and gloom. So it's very interesting to look at these different and always have in mind, what is their goal? Why are they saying what they're saying?
Exactly. So, I mean, each area is going to be slightly different, to be honest.
Of course.
I would expect the bottom to mid end of the housing market in London to pretty much hold out.
Yeah.
Because there's so many people looking for those kind of properties, both in the UK and overseas. In other parts of the country, depending on which part of the area that you're in, they could fall by as much as 20, 25, even 30% in some parts, I would have thought. Now, that's tempered by the fact that what we're telling our investors to do is to look to see if they can add value to whatever deal that they're doing. Thereby, they can isolate themselves somewhat to the market.
So there's a little on adding value, because that's one of the things I know you guys teach really, really well. Because most people, when they talk adding value, that's, refurb and stuff, but you talk about so much more. You talk about how you structure the deal, and there's so much that goes into when you say adding value.
Well, there is. We look at 4 different ways to add value. One is what most people talk about is just the property by doing a refurb, or these days you can talk about, office to residential conversions, light industrial to residential conversions, some degree of development. You can add value in that way, of course.
And that's usually all people talk about. It's that is it. And I love that you have 3 more.
There's 3 other ways that we add value, which is one, it is the individual's the seller's life. Yeah. Can you add value to the seller's life? Now, this is something you may not be able to do if you're doing a deal with the estate agent, because generally you have no idea who the seller is.
Yeah.
But we strike up a personal relationship with the seller. We try to solve problems with property, and thereby we can find out, number one, what are their problems individually, and number 2, can we solve that problem? And if we can solve that problem, can we get a deal? Yeah. So the third way is, can we add value to the underlying mortgage? Bearing in mind that we are doing options. So if we got a right but not the obligation to buy somebody else's house, that house or property usually has a mortgage on it.
Yeah.
And what we'll do is to get control of that property, but also to handle the ongoing mortgage payments. So there are ways and means, and some of them are simple, some of them are much more delicate and advanced, to deal with the mortgage lender to try and restructure that loan, that underlying mortgage in some way. And then the last
goal there, would it be to reduce the monthly cost, reduce the overall size of the mortgage, the term?
It depends on the property itself. So it depends. We're looking at the whole property deal in a sort of holistic way. So if you're looking to add value by putting, £20,000, £30,000 into the property and keep it. That might be different to if we're looking to do something like a commercial to residential conversion, where we're adding significant value. And actually what we want to do is to sell all of these individual units off, at the end of the sort of 12, 18 months. So yeah, it's very difficult to give a one size fits all answer to that. Yeah. But there's different things. And one of the things that we're seeing at the minute, because we're in 2020 now, that people that took out their mortgages 2005, 2004, that only had, say, a 15-year term. And we're seeing that some people have run out of their term, and the lenders are giving them all sorts of stipulations about when they've got to sell the property by, when they want their money back by. And we're even able to add value to some of those deals right now as well, because they can't sell in any other way. Now, to be honest, we're going to see a lot of this, I would suggest, over the next 2 years, because of this. The current lockdown crisis and the coronavirus bill is going to trigger a global economic recession. But you'll be familiar with this phrase, which is Warren Buffett.
Yeah, we love this quote. Yeah.
Wonderful phrase. Investors should be fearful when other people are being greedy, and greedy when other people are being fearful. So at the minute, there's a lot of fear around. Yeah. But that's not what myself, some of my investors, and some of your investors are feeding back, because actually they're saying, we're seeing an opportunity of a lifetime.
Yeah, exactly.
And anyway, the fourth way is to add value to any underlying legal situation to do with the property, or even to do with the person's life. So if there's an underlying court case, underlying legal situation, that could be something like they're being repossessed, or it could be something like it needs a lease extension.
Right.
Then we can take on those, based on some very sound economic principles and investment principles, we can derive ourselves a good deal. So there's many good reasons why we can add value to create a win-win deal for somebody else's life and get ourselves a good deal in the process.
And I love what you say, that you look at a property deal as a holistic process, because as you say, a lot of people, they'll just look at, I can convert this, I can refurb this. Maybe they would look at the lease extension, but you're saying you take an empathetic view of the seller, and you see if you can help their life. You look at legal situations. You even look at the mortgage lender. That is really three ways that no one else, or very few, use to do it. One thing for a lot of our listeners and in our community here are, they work through sourcing agents. So they generally don't work direct to vendor, but they don't work through the estate agent. They'll have a professional working with them. How would you say that you could utilize these skills when you have an intermediary, even though it's not an estate agent?
If we think that the market's going to drop by, on the whole, depending on where you are in the UK, I think you've got to be thinking that the market's going to drop from anywhere between, say, 15 and 30%. Maybe less in London, maybe more in other places. I think you've got to have a look at the individual property. So how long has that property been on the market? If it has been on the market.
Yeah.
How long has somebody been looking to actually sell that property? And what we're doing, because we're going back over previous leads that have come to us, and to seeing, this person first contacted us 6 months ago, 9 months ago. They haven't sold their property yet. Let's just get it back in touch and see where they are. And people are now willing to accept bigger discounts or better deals. Yeah. Or better circumstances. So if you're working with a sourcing agent, certainly think
an important point too, where you say better circumstances, because it's, it can be a lower price, but it can also be a different structure, especially on the lease option side, a longer lease option, lower fees, etc.
Exactly. So I think for your clients, there's certainly an opportunity to go back to the sourcing agent if a deal hasn't sold, or if it doesn't suit your individual circumstances, and to slightly open up that deal again, not to completely renegotiate it, but to slightly open it up again to see if there's a way that you can derive a better deal for yourself. Now, as you say, it may not involve actually driving the price down. It may involve the time frame that you're going to do the deal, any guarantee that you've got on the deal. Does somebody need some sort of money up front? Does that buy you time in the long run, based on the fact that it may be difficult to actually exchange titles on this property for the next 6, 9, 12 months?
We were able to do that. We were able to extend a lease option now for a further 3 years just because of the overall situation. And so the opportunity really is there.
Exactly. Well, we've got a deal recently that we've just done or we're just doing, I should say, where it was meant to be closed in the next sort of month or two. We've managed to extend that by another 9 months, and now we're selling that out to an investor.
Perfect. It puts you in a situation, and that's what's so exciting when you use options like that, and when you have since just adding options, and it's adding to your toolbox, and it allows you to look at more ways at structuring a deal and more exits to get out of it successfully.
Yeah. Exactly.
So what are you, if you would talk to an international investor now, what would you say? What would you do if you were in their shoes?
I think, international investors come in all sorts of different shapes and sizes.
Yeah.
So perhaps one of the biggest questions that we need to ask is, what situation are you in now, and what are you looking to do?
Yeah.
If you're starting off with very little capital, that's one situation. If you're a high net worth individual, that's a completely different sort of scenario. Yeah. So what are you looking to do? Are you looking for cash flow? Are you looking for capital growth? Are you just looking to park your money into something? These are all very different questions. But again, I do see, what I see right now in the UK is a restriction in the money supply.
Yeah.
I don't think that's going to get any better. I don't think lending is going to get that much better anytime soon. Therefore, we've seen that over the last 5 years, but I think it's going to get worse. So therefore, I think we may be looking at things like, peer-to-peer lending a lot more.
Yeah.
Private investors a lot more. My view is that property investing is going to become more in the hands of the people rather than just in the hands of sort of monopolistic banks. And I see that happen. I see that as a process that's going to happen over the next 10 years. I also see the same happening with property investment itself, where if you're looking to get into property, you've now got to look at creative strategies to get involved in those properties. Not everybody has £500,000, £1 million that they can just invest. And even if they do, they quickly find they run out of money quite soon.
Absolutely.
So the creative deals, they're plentiful. They're there to be had. And, I think that's the way to do things. Why? Because you're able to radically increase your return on investment. Rather than you having to put 25, well, actually, in the case of overseas investors, sometimes 30, 40% into a property and facing interest rates of 7, 8, 9%.
Yeah.
Much better to involve, do it through maybe a limited company that's based in the UK.
Yep.
Get into the deal on a lease option and then refinance a few years later when things get better. But you control that deal with a lease option. That way you can use the mortgage that's already on the property, at 1%, 2%, rather than forking out 7, 8, 9% for that same deal. And now what we're seeing, because, we're seeing our leads are up by 25% since a month ago.
Wow.
So at that level, even, people that we had previously made offers on that weren't maybe receptive to a lease option are now receptive to a lease option.
That's amazing. Yeah. Let me stop you there for a second, give some clarification here so everyone keeps up. When you say peer-to-peer, that obviously means that's generally through a platform where individuals will lend to other individuals or small businesses. So there are a lot of different peer-to-peer platforms where you can register. And I agree. I've seen they've been in huge growth over the past 3 to 5 years, and I think they're just going to keep growing.
Absolutely.
And the same there with lease options. I mean, it's a huge, exciting opportunity. And as you say, it's almost as if you subsume someone else's mortgage. I mean, technically you don't. You're leasing the property, and then you generally pay that fee. But in practice, not in theory, in theory you're not, but in practice, essentially you're taking over that mortgage.
Exactly. Yes. So there are, of course, in terms of what we do, there are a lot of legal implications.
Yeah.
We have those legal implications down. They change on each deal, of course.
No, of course.
So there's a lot to bear in mind. And yes, it is a steep learning curve. But, we tend to know what we're doing. We don't tend to make mistakes based on property, because we're quite forceful in terms of marketing, in terms of getting people to pick up the phone to us, but we're very conservative in terms of which deals that we actually take on.
Yeah. And of course, I mean, if one in our community wants to do a lease option or gets a lease option, there are solicitors that focus on that type of deal, like MS Law as an example, who focus exclusively on successfully doing lease options. So as long as you have the right solicitor, you can.
Yeah. Well, we work very closely with MS Law solicitors. We have done for 12 years now.
Yeah.
So they're certainly the leading lease option solicitors in the UK. So we do use those.
Yeah, absolutely. And that's where you have your safety covered. I mean, I compare often lease options to, I mean, a lease option on a house is very similar to a lease option on a car. It's you might pay a small fee up front, you pay a fee each month, and then you have an option to buy it at the end or trade it in for a new one. And it's a very simple process.
Absolutely. That's one of the analogies that we use as well.
Yeah. Cool. So what do you see now over the next, maybe a next decade, if we look forward now and kind of see where do we think the world of property is going to go from here? Obviously, whatever you say will probably be wrong, and we will catch you up on that. But anything that gives us kind of an idea, it's like we say, the best laid plan becomes useless once the battle begins. But having a plan makes us so much more ready for when the changes come. So I'd love to hear your thoughts.
I have a definitive view about what I think.
Yeah.
And this may lead us into a slightly contentious area.
And that's good. And we can use the phrase, you heard it here first, folks. So that's perfect.
As I say, I do see the Bank of England dropping their rates to 0.1% at a time when the private banks are raising their rates, tells me that the banks are not expecting anything to be good anytime soon. Mm. Now, just a week earlier than that, I was doing a workshop in the UK to some private students, and I said to them, quite outlandishly, that I foresaw negative interest rates by the end of the year.
Well, that's what we have in Sweden and have had for a while now. So it has happened in other countries before.
Yes, exactly. So just a week later, they dropped to 0.1%.
Right.
Everybody's calling me up.
Oh my God, you were right.
How did you know that? Well, they're not negative yet.
Yeah.
But they're certainly going to go that way. So what we're seeing is, again, the restriction of the money supply. So, in the way that money is created, it's created as debt. A lot of people don't really fully sort of understand the banking mechanism, which is based on fractional reserve lending. Yeah. But once you do understand that model, you understand that, when you go to a bank to try and get a mortgage, the bank don't physically have that money in their savings.
Yeah.
What they do is they literally create that money out of thin air and then lend it to you. And as is the case, they then say that you've chosen to deposit that money with them because it's still with that bank.
Right.
And they can now create another 10 times that to lend out to other people. Now, I don't think that that's what's going to happen right now. And there are a number of sort of players. So Mervyn King, I think the previous governor of the Bank of England, is well known for having said this current banking system, if you were going to create a banking system now, it would not look like what it looks like now.
Yeah.
It's a very inefficient way of running a banking system.
Yeah, and I think an important there for everyone who didn't keep up with kind of the structure you were talking about, the easiest is probably to watch Ray Dalio's short video, just the principles of economics. It's on YouTube, and it really explains that. And he really shows that inefficiency that you're talking about with the banks raising interest rates to stop inflation, lowering them to increase it, and then just kind of running that back and forth.
So it's going to be harder, I believe. I don't think banks are going to be opening their coffers anytime soon. The banks don't need us so much anymore.
No.
And I think that's going to be difficult anytime soon. My interpretation of what's going on right now is that it's not really about, this is just me, it's not just about the coronavirus. And I've got different views on that, which I'll not share with you because it's inappropriate here.
We'll stay to the property topic, yeah.
Thank you. I believe it is the beginning of the end of the change in this particular financial system. All systems come to an end when their time is due. This is just a law of nature. Right. My belief is that, I mean, this system at the moment is called capitalism. I don't believe it is capitalism because the capitalism relies on a free market. And this isn't, when you study the banking system, you understand it's not a free market. When the banks fell down in 2008, they were bailed out by the governments. So therefore, it's not a free market. So this system is falling down, and I believe that it will further fall down. And when you see the Bank of England, the private banks raising their interest rates, you know that they also think it's going to fall down again. That's what it tells us. So if this is the beginning of the end, I see that process not happening immediately. You know, you're not seeing the fall of capitalism next month, but over the next 10 years.
Right. And where do you think that will take us? Where will that go when, what will the new system come out of?
I like to be an optimist in this. And that
while saying the whole financial system is going to fall apart. I love that.
No, but I think that it falling apart is a good thing.
Right.
I don't think it's a bad thing. I think it's a good thing. And as I say, I believe there's lots of opportunities while it falls apart. If people are not able to sell their houses because people cannot get mortgages, they have to look at other mechanisms to sell their houses. So my belief is that the power goes from a few monopolistic banks and further into the hands of the people. Right. And if we are one of those people, if we are tuned into magnificent networks like yours, the Swedish Wealth Institute,
Momentum, exactly.
Then the people are able to learn what they can do about it and how they can benefit themselves and their families for the next 10 years.
I love it. Hey, I gotta use the 40s quote. You heard it here first, folks. The banking system will fall and the people will rise. Our time is now. So what would you say to prepare for this as an investor? What should you be doing to prepare for this? I would say the new brighter future we have coming to us.
Well, you have to understand the way I think is different to the way that many people think. I understand that. You also have to understand, I'm a lease options expert. Because of that, the way that I think is the way different to what other people think. And so, I just think there's tremendous opportunity for us moving forward. There's tremendous opportunity for us to do deals with normal people, as long as we get skilled at it. What do I suggest? Don't but buy just on the basis of making a short-term profit.
Mm.
Don't be just wholly reliant on the market itself.
Yeah.
Do look to add value to properties themselves, and have a medium and long-term goal. You know what you're trying to do in a year's time, 2 years' time, 3 years' time, but also know where you're looking to get to in sort of 5 to 10 years' time, because I think that's really going to be key. One of the things that we tell our people is that, you need to have a fund now. You need to do the same things that, you and I teach, which is look at trying to gain your financial freedom first.
Yeah.
So be in a position where you don't need to work.
Yeah.
Down. It's it's only 3 weeks in so far.
Yeah.
To me, it's Christmas time.
Yeah. Yeah, give it another 6 months. And yeah, no, but that's true. That's true. And that is, I love that you talk about that long-term view. I mean, that's really what our community is all about. That's what being a momentum investor is all about. It's about using the momentum of compound interest, compound capital appreciation over time to build yourself a true asset base. And that's really where the key is. And that's where the long-term success is. So I think put yourself in that position. I mean, we understand that it's a humanitarian disaster that's going on, and we respect that. And like I said, I have a close friend who's passed away, but at the same time, there is going to be an amazing amount of opportunity, and more so if your prediction comes right. If we have the current banking system gets broken down and a more efficient one grows up, we can be a leading part of that evolution and that change.
Yeah. So yeah, there's a tremendous opportunity for people who are really looking to go forward. One of the things that we're saying, one of the things that we're saying to our investors hasn't changed in 5 years. Okay. So we're saying you need to, obviously it helps if you have cash.
Yeah.
If you don't have cash, that's still fine, but you need to build up your cash base. I mean, even one of the things that we're doing right now is we're building our network of high net worth individuals. So we're working with a hedge fund, we're working with pension funds, we're working with high net worth individual private investors from overseas to invest in deals that are available in the UK. We're working with venture capitalists who, by the way, knew this was coming 3-4 years ago. Not necessarily the coronavirus, but they knew the global economic meltdown was coming a few years ago and have been waiting for this opportunity to get properties on the cheap.
Yeah. Well, that's one of the people I love. I mean, Robert Kiyosaki has been talking about that for years. And one of the things I love about his way of looking at it, and this goes really to your prediction and your strategy, and I know you follow this, but what he says is investing, most people see investing like flipping a coin. Either you're right with your prediction or you're wrong, meaning you either won or you lost. But what Robert said is the key is to understand that a coin has 3 sides. The coin can land heads or tails, but can also land standing up. Our job is to stand on the top of that coin. Whether it falls heads or tails, we want to put ourselves in a way to win.
Yeah.
And that means, and that's what's so glorious about lease options. A lot of people call it the holy grail of property investing, just because if things go the way you want them to, great, they went the way you wanted them to. If they don't, well, you still have control over the property, and you still make sure you win. You can restructure that deal like we've both done with lease options in this time to make sure we win anyway.
Exactly. We've just got a deal that came on board a couple of months ago, to be honest. And it's a deal that's not far from Heathrow. So it's, to be honest, it's just 2-stroke, 3-bedroom, semi-detached house.
Right.
We sort of structured this immediately, hoping we were going to be able to get planning permission to turn it into 2 flats.
Right.
Now, it seemed when we funded out to the architects and to the planning consultants that wasn't possible. So we were left with a deal that we still had to do something with. And this is, again, the magic of options, really. Yeah. So we managed to reconfigure or restructure the whole deal, not necessarily with the seller, but in terms of what we were going to do to add value to that particular property.
Right.
So with control of that property, we've just restructured it. We've realized, hang on, it's near Heathrow. It's going to be perfect for serviced accommodation.
Yeah, that was my instant thought is, people will want to stay there on the way to and from the airport.
It works better as serviced accommodation than it actually did as 2 flats.
Right.
The second strategy is actually better than the first strategy.
Yeah.
And so we've sort of reconfigured that. And we've also then restructured things with the sellers so that we've got sort of 9 to 12 months to do it.
Yeah.
Which
and
is,
then of course, now you'll have to look at what do we do during this period where service accommodation isn't.
Right. But there's still quite a lot of planning permission and conversions and other bits and pieces that needs to do in the meantime.
Right. Yeah.
So it's not going to run a serviced accommodation straight away.
Yeah.
Because you're going to turn it from a 2/3 bed into a 5-bed house for serviced accommodation.
Right.
And that's going to take probably at least 6 months. And by the end of the 6 months, towards 9 months, hopefully people are going to be able to sort of service accommodation strategy is going to work again at that point. Hopefully after the lockdown is over.
And I mean, in the meantime, I mean, I know people who are renting out apartments as quarantine living.
Yeah. Yeah.
And
exactly.
they're renting them as service apartments just for a month at a time with no voids, no changeover fees, essentially no costs, and a hotel rate per night. So they're making a killing in these times.
And they're hoping that lockdown, continues forever, really.
Exactly. So to wrap up, we always ask for one great tip that you think that those who are our community here should take with them as they go out into this brave new world. So what would you want to leave people with?
2.
Okay.
First, we've basically already covered, but it sounds simple when you speak about it and when I speak about it, but it cannot be overemphasized. Because it seems that, coronavirus is terrible and everything's bad and there's a lot of fear going around. But we do have, I can't overemphasize this, we do have to flip that on its head and to say that the next 10 years is going to be an unprecedented opportunity to be a property investor in the UK. Absolutely unprecedented, as long as you know what you're doing.
I love 10 years. It's not just the next 10 weeks.
It's not the next 10 weeks. No. Yeah. I think there's got to be a 10-year plan in place.
Yeah.
And we're looking at the long term, not just the medium term. The next thing is that a lot of people get phased sometimes by the numbers, especially beginning property investors. They think, you're buying a property for 200,000, 300,000, 500,000. Oh my God, what am I going to do? In terms of being a lease option investor, it's good to note that this is the principle. You are only ever negotiating with the equity in the property. So if you take that on board, the equity is basically defined as the mortgage that's outstanding on that property. And it's the difference between the mortgage outstanding and what the property's worth.
Yeah.
Okay, so if the property's worth £300,000 and there's a mortgage outstanding of £225,000, then the equity is £75,000. That's what you're negotiating with as a lease options investor. If they've got £75,000 outstanding, they think if they put the property with an estate agent and they sold it, they'd get £75,000 into their pocket.
Yeah.
Or if there's only £5,000 outstanding. So they think if they sold it through an estate agent, they'd only get £5,000 in your pocket. Both of those situations are extremely different.
Yeah, absolutely.
But to an investor, that's all you're negotiating with. And if you keep your eye on the prize, you literally keep your eye on the tennis ball as it's going over the net, you could negotiate yourself some absolutely astonishing deals.
That's great. I love that. Yeah, because obviously, and that's where your structuring comes in. When there's just 5,000 of equity, you as a lease option investor, your eyes pop and you get excited. When there's a £75,000 equity in there, as a regular cash buyer, there's more margin for the person to give you a discount. So either way, you can win.
Yes.
All right. That's great. So how can people connect with you, learn more from you? How can they find you now that they've gotten to know you a little bit?
Well, if they want to find me, probably the best way is they can email me. should I give them my email address?
Yeah, share your email. Absolutely.
Okay. So my email address is richard@romp, ROMP, ROM for mother, P, implementation.co.uk. So if you're interested in taking advantage of this opportunity, do feel free to email me. We find properties, we do marketing for motivated sellers in the UK. If you're looking to see how we can help and what we can do, just email me there and we can take things forward from there.
That's awesome. Thank you. So yes, if you want to have this type of opportunity, want to see how Richard can help you find good deals, better deals, lease options, Richard at rompimplementation.co.uk, and he'll help you out. Thank you so much for joining us. I love all the advice you've given us, and we'll stay in touch. Thank you so much.
It's fantastic. Thank you. Lovely speaking to you, Daniel.
Thank you. And thank you everyone for listening. So thank you so much for joining us for this episode. We heard some very intriguing things here from Richard, how to kind of prepare ourselves for the life that is coming and what's going to be coming in the next 5 to 10 years. In our next show, you're going to love it. We have one of the top business consultants in the UK, Mark Sefton, who is coming on to share with us kind of the mindset we need to have now to get through these tough times, how to kind of think and how to prepare ourselves for what is to come. So this is about putting yourself in that positive mental state. He shares with us how to take and scale a business, how to find and grow a business idea, and really how to make sure that you as a person are ready to handle these times and handle the future. So make sure you subscribe to our podcast so we can see you on the next episode. Thank you again so much for joining us. We'd love to have you a part of the Momentum Investing community.